In the world of venture capital, general partners are the key decision makers. They are the ones who raise capital, manage investments, and ultimately determine the success of a VC fund. But what exactly do they do, and why are they so crucial to the venture ecosystem? At the core, a general partner is a senior-level investor in a venture capital firm. They raise money from limited partners, which include pension funds, endowments, family offices, and institutional investors, and use that capital to invest in high-growth startups. Unlike LPs, who are passive investors, GPs are actively involved in every aspect of the fund's operations. Their responsibilities can be broken down into three key areas. The first area is fundraising and managing LP relationships. Before a VC fund can invest in startups, GPs must first raise capital. This means pitching their investment thesis to LPs, explaining why their strategy will generate high returns, and securing commitments. Once the fund is operational, GPs maintain relationships with LPs, providing updates on portfolio performance, market trends, and fund strategy. They ensure transparency, trust, and alignment with investor expectations. The second area is sourcing and selecting investments. General partners play a crucial role in the venture capital ecosystem. They are responsible for finding and evaluating startups with high potential, a process that requires both strategic effort and sharp judgment. The first step for GPs is to build a strong deal flow pipeline. This involves actively networking with founders, attending pitch events, and leveraging industry relationships to stay connected with emerging opportunities. A consistent and high-quality flow of potential investments is essential for long-term success. Once promising startups are identified, GPs conduct thorough due diligence. They analyze a range of factors including the market potential, financial projections, product differentiation, and the capabilities and cohesion of the founding team. This evaluation helps ensure that investments are made in startups that not only have innovative ideas, but also the structural strength to execute and grow. After due diligence, GPs move into negotiating investment terms. This includes discussions around valuation, the equity stake the venture capital firm will receive, governance rights such as board representation, and liquidation preferences that protect investor interests in different exit scenarios. Exceptional GPs are distinguished by their ability to identify disruptive opportunities early and by their instinct for backing founders who have the vision, resilience, and leadership qualities needed to build transformative companies. The third area is portfolio management and exits. Securing funding is only the beginning of the relationship between a startup and its general partner. Once an investment is made, the GP's role continues through active support and strategic guidance to help the portfolio company succeed. One of the key ways GPs assist their companies is by helping them recruit top talent. Building a strong team is often critical to scaling operations and achieving business goals. GPs also work closely with startups to develop effective go-to-market strategies, ensuring that products and services reach the right customers in the most impactful way. Throughout the startup journey, challenges are inevitable. GPs provide valuable advice on how to navigate obstacles and, when necessary, help founders pivot their strategies to better align with market realities. In addition, they play an important role in preparing startups for future fundraising efforts, offering support in raising follow-on funding during subsequent rounds. Beyond operational support, GPs are deeply involved in maximizing the value of their investments through strategic exits. Whether through initial public offerings, mergers, or acquisitions, GPs work to position their portfolio companies for successful outcomes. Their ability to time exits strategically and capitalize on favorable market conditions is a major factor in determining the overall success and returns of a venture capital fund. Being a GP is high risk, high reward. They typically receive compensation through management fees, usually 2%, that covers fund operations and salaries, and then the carried interest, usually 20%, which is a share of the fund's profits after LPs have been paid. However, raising a VC fund is incredibly competitive, and GPs are expected to deliver strong returns. If they don't, LPs may not invest in their next fund, making it difficult to sustain a long-term career. In short, general partners are the architects of a VC fund. They raise money, find investments, manage portfolios, and drive exits, all with the goal of generating outsized returns. Their ability to spot opportunities, support founders, and deliver results is what defines the success of a venture capital firm. For those considering a career in venture capital, becoming a GP is the ultimate goal, but it requires experience, a strong network, and a track record of smart investing.